With rates back up, you can't afford to make a misstep with your mortgage. Here are 7 red flags that can cause you to either pay more than you should, or worse, not get approved at all. Stick around for number 7. I was surprised by that one. I'm Rob Hundley with the AZ Realty by Rob team from Asherkheim Real Estate. I post lots of real estate tips and tricks, so be sure to subscribe so that you don't miss anything. You probably already know that your credit score is important, but do you know how important? Much of your mortgage starts with your FICO score. A medium score, it's pretty much the minimum to qualify. But more than that, the better your score, the less interest you'll pay. Now, this can add up to thousands of dollars, so it's pretty important. Unless you already have an excellent FICO, it's well worth it to work on bringing it up. There are ways to do it, and I can point you in the right direction without it costing you anything. The next red flag is often missed. That's your debt-to-income ratio, or DTI. Just having a good FICO score isn't good enough. You need a low enough DTI to qualify too. You can find your DTI by dividing the total of your monthly debt payments by your before-tax income. Now, if your DTI is too high, you should work on paying off enough of your debt to bring it up to an acceptable level. Now, again, I can help you sort this out. And you certainly don't want to take on any more debt until after you've closed on your new house. If these two weren't invasive enough, the next ones can make the mortgage process feel like you're under a microscope. As much as I don't like to say it, because I know how it sounds, the process really is in your best interest. It's all there to keep you from getting in over your head. And as uncomfortable as it can be, it's far better than losing your house in a foreclosure. Number 3, recent account overdrafts are another huge red flag. Having overdraft protection can be big if you have cash flow issues, but don't depend on it. Watch your spending in the months leading up to applying for a mortgage. If you have to, turn off autopay if there's a chance that your bills will hit your account before your paycheck. Number 4, deposits out of the norm, another red flag. Be sure that you can document where all the money that you deposit comes from. You can receive gifts from family members wanting to help you buy a house, but you need to be able to prove that it's a gift and not a loan. And yes, they will check, and the underwriters will probably double and maybe even triple check. 5, if you're your own boss, chances are you receive income as a 1099 contractor instead of a W-2 employee. While there can be a lot of benefits to being an independent contractor, chances are you will have to account for your income, especially if it varies from month to month. Which leads to number 6, unpredictable income. That's another red flag for mortgage lenders. So be ready to provide proof of income no matter where it's come from for the last couple of years. Finally, number 7, this is the one that surprised me. Big life changes, getting married, getting divorced, job changes, having a baby, or even kids going off to college can raise lender concerns. Now, it has nothing to do with the particular change itself. Rather, it has to do with the financial impact it will have on you going forward. So be prepared to answer any questions about your ability to make your payments. However, if you feel that you're being discriminated against, don't hesitate to report it to the Federal Trade Commission. A couple of bonus ones. Please, please, please double and triple check your application. Errors will have to be corrected. Overlooked debts can get your app tossed without even a second thought. So make sure that you give them all the info that they ask for. Again, I can help you with all of these and more. Having the right mortgage lender is super important, and as a real estate agent, I know a lot of them. In fact, I know some fantastic ones. Thanks for watching.